Good morning, and may the 4th be with you on this May the 4th. Welcome to the Market Forecast. My name is John Hoagland. As always, thanks for trusting me with your time. Seem to be having a little bit of streaming issues here. Hopefully, it won't be a problem for us. Welcome. It's Tuesday. We've got lots going on in the markets at some of them at kind of important levels. And we're going to be seeing those on the charts very shortly. As always, we're hoping for accurate context for you and good risk management as always, and try and stay patient. Eco numbers this morning, 7:30. The international trade balance came out a little worse than expected. We're expecting factory orders at 9 o'clock. Also in the news, there's a little bit of congressional debate on the economic plan going on today that may raise the risk of headline risks throughout the session today. U.S. stock indices to open lower today, like I said in the title, looking to the dark side a bit this morning as investors eye earnings, and of course awaiting lots of employment numbers coming out tomorrow, Thursday, and the unemployment rate on Friday. So looking forward to that. New York, New Jersey, and Connecticut have decided to lift many of the coronavirus restrictions within the next couple of weeks. I think that's a good thing. Of course, earnings due out or already out. Pfizer out, beating expectations. T-Mobile is coming out later on after the close. CVS came out better than expected. ConocoPhillips better than expected. Lyft also due out after the close. Crude prices have certainly firmed up, testing last week's high as well as weekly kickoff high. Make sure you like, share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Very happy to see everybody here this morning. Touching base on the VIX, the dollar index, and the yield for the 10-year VIX up about 6% this morning. Of course, equities looking lower. VIX is going to be creeping to the upside. 1939 last time I looked. Dollar index up slightly this morning. 91.24, holding above that 91 level. And the yield in the 10-year slipping off a little bit now, 1.59%. And got to say good morning to everybody. I saw Brian is up and early this morning again, wins the prize. First one in the room. Felix, the infamous Escobar, is in the room. Theo, good morning. Ravenwise, up early today. Going to get to your S&Ps in this morning. Jim Wolf, Vince, Lamus, Bill, good morning. Ed Nelson, Ed S., good morning. Caesar, Colin, John, Ashton, Keith. Keith, good morning. Good to see you. Sunil, Trading Research, KM, Mike, the Chef Magallanes in the room. JD, good to see you this morning. Piples, PD, Greg, Colin, I know a standard rule of thumb is 2-to-1 or greater reward over risk. Curious, have you seen traders successful with 1-to-1 reward over risk with a greater win rate? Yeah, we do see that. You know, to me, it's a little bit more of a challenge. You really have to count on being right a lot if you're going to be looking at 1-to-1 reward over risk. I'm okay being right about half the time as long as my winners are twice my losses or better. Good morning, Rob T. Ryan, good morning. First day funded. Nice job, Ryan. Glad to see that. Take your time. Remember to dance with the one you brung. What got you there will get you in the right direction. We're all hoping and looking forward to your success, Ryan. Joshua, good morning. Oleg, Richie, 8-Ball, good morning. Jerry's awake. I'm not quite sure I am yet, but I'm getting there. Jason, good morning. Vici, Shady Trader, good morning. Subconscious, Ravenwise. The 30-year might have a better play today, but I love the S&Ps. Me too. The market I've been kind of attached to for many, many years in this industry. How does everyone get here before the broadcast starts? I have to keep refreshing my browser, and then it's already 30 people here. I don't know. Trading Research? It's a good question. Maybe somebody can tell you here. I'm going to put the link in to sign up for group coaching tomorrow afternoon at 1 o'clock p.m. Central Time. Always looking forward to that period of time just enjoy having the opportunity to sit and chat and talk to traders about trading. You can email in questions. You can ask questions on the fly. Always looking forward to that. There is the link to register. Okay. Good morning, Colin. Yes, you're welcome. Yeah, everybody's always looking for an edge, Colin. What's your edge? Well, I've got a 70% win rate. What's your edge? Well, I'm only doing this or I'm only doing that. One of the edges that I think we should all be kind of focusing on is staying within our plan, staying within our process, our strategies. It's very difficult, especially when it's kind of boring sometimes. A lot of trading is just sitting there waiting for alignment with your strategy. If I had to put a finger on what I think my edge is, it's the reward over risk. I don't even take a trade unless I believe that it's reasonable and probable that I could get a 2-to-1 or better reward over risk on the trades. Good morning, Prophet Eon. All right, let's jump into the charts here. Let's see what's going on. And here we go. I've got the 30-minute on the E-mini S&Ps here. I'm going to start, as always, with the daily and crude. We're going to start here with the 30, see if we can see any good information here. Opening range about 6 minutes old. Let's take a look now, all right, at the daily. So, well, that's not going to work for us. Here we go. Now we're a little bit better. All right, let's make this big, make this big. Okay. So we had a pretty big uptick in open interest yesterday, but on lower volume. It makes sense because we were pretty much range bound. But we had about 13,600 estimated in open interest. This tells me that there's still some interest coming into this market to the long side. Upside structure has now brought a test of weekly kickoff high. Our weekly high from last week also, we've put a test up to this trend line to a almost a perfect contact to that trend line, which was, of course, resistant. Weekly kickoff high, last week's high also should be somewhat resistant. So I'm looking for signs of acceptance above this weekly kickoff high, 65.50. That's pretty much last week's high. And if we find acceptance up there, I think we could find room to run. Of course, this trend line is going to be a little bit of a stumbling block. Our overnight high, I believe, tells the story, 65.84. To find acceptance above there, we may find this market looking more to continue to the upside. So rejection of weekly kickoff high, rejection of that level puts us back into maybe an opportunity for a short, but I'm going to be kind of brief in that short. I don't want to fall in love with anything on the short side in crude oil just by the things that I'm seeing. So take a look at the 30-minute chart here now. All right. So no indication whether the opening range is the high nor the low here just yet. We've got some overnight longs, short time frame longs, weaker hands longs up against what we believe is going to be an important inflection level. Last week's high, weekly kickoff high. If we can accept above that, we may be starting to see longer time frame traders need to adjust inventory. If we can't accept above it, we've got enough longs in this market in short time frame to push this market back to potentially close the gap or bring the market back down to settlement. So it's kind of a pivotal area we're in right here. I'm going to be looking for signs of acceptance above this level. I'm going to be looking for signs of rejection below this level. Be careful with that because on something as pivotal as this, the tendency is to go long above and short below. If it becomes magnetic, it can chop you up. So try and stay patient, look for the right opportunity, and see if you can't, find a way to get an execution near this level. Timing is, of course, going to be of the essence. Good morning, Troy, and good morning to my brother Rick. Good morning. Opening range trade? I don't see that the opening range trade has provided any great opportunity here just yet. So, I'm going to be looking to see. I mean, if we're going to push price above this this important inflection level, I'm going to see if we bring in more volume, if we begin to create more momentum to the upside. It's going to be an interesting trading day in crude oil this morning. We are looking for API this afternoon. We're also looking for EIA tomorrow. So, lots to question here. I'm going to be trading what I see. Rejection above, short. Acceptance above, long. E-mini S&Ps. Okay. This is going to be another interesting and fascinating and hopefully profitable day for us. We've been kind of watching last week's range as important for us, okay? We've been range bound. It's been a narrow range, lots of kind of slow activity. News came out on Wednesday in the FOMC, the speech, all of that kind of created mostly the entire range on Thursday. Friday, unable to hold up against this 4,200 level. We came off, tested it again yesterday, now testing the low of last week. Acceptance outside the range from last week seems to be important. It seems to be telling me, at least initially, that if we accept below this the weekly low from last week, there is space for the market to continue to move to the downside. It seems to be heading that way already this morning. Overlapping ranges, volume and open interest. We added 17,000 in open interest, and we were unable to bring in volume, and we were unable to push price above that weekly kickoff level. Interesting. Seventh day of balance here. Again, we're opening with a test of last week's low. All right. So again, acceptance outside last week's range, I think, brings potential bigger opportunities for us. Take a look at the 30-minute chart. Okay, here's last week's high, here's last week's low. Yesterday, really just kind of range-bound, no real activity, lower volume, increase in open interest. That's good. There's a little bit more power to whatever opportunities we do come to, either failing to accept outside last week's range or in acceptance, there's a little bit more power to it. Settlements all the way up here, 41.8575. Put that on your charts. Pretty much the overnight high. Do we have some overnight shorts here? Or is this a little bit longer time frame traders coming in and pushing this market lower prior to the open? Brought in a little bit of volume. The overnight inventory was pretty much reconciled up to this point. A lot of this is going to depend on if this is longer time frame traders pushing this market lower, if they can hold it below the weekly low from last week. Last week's low, again, pivotal. That's this pink line right here. We're kind of stuck there. We're kind of holding there. We're waiting for the U.S. Markets to kind of open up. We're going to see if we can find some momentum and volume down there, or are we going to come up and close the gap? Are we going to unravel all of these new shorts to the marketplace and bring this price back to a higher level, perhaps another better trade location to look for shorts if that is part of your one of your hypotheses? I'll be watching the market at 8:30 to 8:31 to see if the opening range is left at one extreme or the other. We have three markets that have done that already this morning. We're going to see that very soon. So we have a gap. We're going to be working gap rules. If we can't close the gap relatively early, we're going to continue to look for opportunities to the short side. It's going to be fascinating seeing this market open up this morning. So we're going to make sure we have about 5 minutes to kind of prepare ourselves for the regular U.S. equity open. NASDAQ, we already broke last week's range. We closed below it last night. We brought in 5,500 in estimated new open interest. Okay, the volume is not necessarily indicative of a continuation to the downside, but the open interest coming in and the close below last week's low has indicated, you know what, I think we've got more space to the downside. I'll be looking for an opportunity to see this market move all the way down to 13,578, the weekly kickoff low. It's the weakest of the four U.S. indices, futures industries, the Russell, the Dow, and the S&Ps. Take a look at the 30 now. I mean, we are going to certainly see some overnight inventory to the short side. Settlements up here, 13,790, 13,790. Put that on your charts. We've closed below last week's low. And we've got gap open. We've got gap rules. The opening range trade, a distinct possibility. We're opening out of balance. If we come in here and the market opens and we leave the opening range at the high of the session, that may indicate the market is ready for a continuation to the downside. If we leave the opening range at the low of the session, it may mean a little bit of overnight inventory adjustment, maybe towards a gap close. But again, if we can't close the gap relatively early, we'll look for shorts up in that area. Gold is one of our markets here that has left the opening range at one extreme, at least initially. Okay, last week's range, again, it's signified by these pink lines. We closed above the high from last week. We've been testing it. We're at it right now. It's going to be another interesting trading day. What else are we seeing here in gold? We added 14,000 in open interest on higher volume, on an up move. Buyers coming into this market, holding upside structure. Okay, that's good. That's good. Let's take a quick look. Okay, settlement all the way up here. Put this on your chart. 1791.80. The market closed above that last week's high. We've got some overnight shorts here. Opening range, the low of the session. The opening range low is 1783.20. I've made it red here, maybe a little bit more visible. This can be a useful reference as the day goes on. If we accept above this line, this is last week's weekly high. There's no limit to what kind of space we can find up there. We've opened below range, even almost with a little bit of a gap. We may be looking at the value area special situation play, which upon opening outside of range and value, if price goes back into the previous day's value and finds acceptance, there's a high probability that the market at some point in that session could trade all the way to the other extreme of balance, which would put us roughly up here at 1796.50. So we've got some opportunities here. That opening range, really a nice sweet spot there. The hulls had already moved up, leaving the opening range at the low of the session limits your risk on that early trade, and it certainly continues to be paying us off so far. All right. Take a quick look at the euro and the 10-year. We got some good time here. We're on a good pace. Very good. All right, so the euro break of structure has kind of created a short time frame balance. Here's our directional move to the upside. Last week's range, still struggling with last week's range. And the fish are jumping in the boat. Well, there's definitely fish out here. We can find them. We can find them as long as we don't get our lures snagged or break the line. So the break of it, we had a pretty good push down on Friday, Monday to this is Tuesday. Pretty good volume on that move down on Friday as well. Yesterday we added 7,000 approximately in open interest after breaking out. Is that new longs, new shorts? It's kind of tough to tell. Last week's low is, of course, going to be pivotal for us today. Look for signs of acceptance or rejection. Yes, last week's low was 120.26.5 ticks. Another interesting, fascinating, challenging, exasperating, aggravating. It's the whole gamut of human emotion, ladies and gentlemen. All right, so settlement all the way up here yesterday, 120.76.5 ticks. Put that on your charts. Lots of overnight shorts in this market. Again, against last week's low. The opening range remains the low of the session, at least so far. That opening range low is 120.28.5 ticks. Got it here marked in red. If we're holding that long, we're not going to be risking much, that's for sure. As long as the market keeps ratcheting higher, it may put some pressure on these overnight weak-handed shorts to push us back towards a gap close. But again, with gap rules, if we can't close that gap relatively early, any longs might be well advised to get out before getting to that level and then looking for opportunities as the day goes on. The 10-year is fascinating this morning. All right, so last week's range in pink, we're threatening it now. We're threatening weekly kickoff high just above that. Volume slowed yesterday on this move to the upside, but we did add 29,000 in open interest. Not a huge number. We added over 70,000 on Friday on higher volume on an inside day. So volume falling off, is that going to make our upside move here a little bit less likely? Well, if rates continue to slip to the downside, it's just a matter of time before we're going to break out of this and perhaps break out of the weekly kickoff high. Again, a lot of that, the rates largely stable, slipping off a little bit here this morning. Last week's high really put in the high of the session yesterday. That was a pretty good opportunity for us. This may create a whole new opportunity for us. Let's look at this on the 30. So yesterday's high was that previous week's high. We are dancing with it now. We're looking at it right now. No real inventory this morning. The opening range, the red line right here, remains the low of the regular trading hour session. We have buyers in control, at least so far. And I don't want to step in front of this. This is one-time framing activity, and it's going to be something I'm going to look for some sort of structure. Maybe the structure I would look for would be weekly kickoff high, which is 133 and 17 and a half ticks out of 32 ticks. Right, so opening inside of range and value. Usually, I'm going to say we're going to try and stay patient, but the opening range was so small, it offered a very cheap opportunity and has created a pretty decent opportunity to the upside. So, in that regard, who was it that was saying? I think it was somebody was saying, I like the 10-year, but I really Ravenwise was talking about he likes the 10-year, but he loves the S&Ps. Here, I get the question here from Jerry is awake. Open interest, is there a specific website I use for that? Yes, there is. I'm going to put a link in to the stream right here. This is the information that I use. Now, Raven, I don't have time right now to necessarily go over how I look at that, but join the group coaching. Join the group coaching tomorrow. I would be happy to kind of go through what I look at and how I look at the volume and open interest on those sheets. Maybe tomorrow, if we have time, I can kind of go over those. But I want to give everybody plenty of time to be ready for the regular U.S. trading hours opening. It could be a fun one today. Always looking forward to that. Be looking forward to seeing you this morning, probably about 11:30 for the Coach's Playbook. We're going to be talking about, is it possible for your absolute number one favorite setup to fail? And we're going to be talking about that. Jerry, you betcha. All right, let's take our deep breath. We're giving us about 4 minutes here before the equity open. Stay humble, grateful, and creative. Get out there and profit. Be good to yourselves. Be good to each other. And we'll see you for the Coach's Playbook. And then Dan will be here, hopefully, for the market recap today at 3 o'clock. We'll look forward to seeing you at all of those. Trade well. Now, stay patient and find that right opportunity. Little risk, big rewards. Have a great trading day.